Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, May 14th, 2020. This will be video number 2 today. In the last video, I'll cut it short because I wanted to do, it was getting a little long and I wanted to cover commodities and some other things in a separate video. So as I like to do, I'll start out, even though I'm going to cover commodities, and we'll look at Bitcoin too, or a couple questions on that, maybe even a couple pot stocks. Just really trade ideas, other different things I'm watching, different asset classes. But to just kind of update the broad markets, here we're at. Today is kind of a more back and forth. Remember, we're digesting the gains. We've had two of the biggest down days, and including today was day 3 of that in a long time. So you get the very shorter term time frames. A 30-minute chart, 60-minute chart. You get oversold, and when you get oversold, it doesn't mean you can't become more oversold, but that's usually when you get a market bounce or a correction either ends, or at least you get some consolidation there. Now during an uptrend you get oversold and it just loses a little pause and then you keep going up. But as I talked about earlier, we have what so far it's work to be done, but so far the early makings of a new downtrend. I'm circling the lower highs right here, this high lower than that previous high, and lower lows. That is, again, the definition of a downtrend. So we have the early makings there, and therefore in an uptrend, oversold is usually one and done. When you get those oversold readings, great, time to get in for the next leg up. It's one and done. But when you are in a downtrend, oversold tends to become more oversold, or more deeply oversold. In other words, you go much below that 30 level, which is traditionally or typically considered oversold, that green line there. Or you become oversold again shortly afterwards. Just like in a bull trend, when the trend is bullish, as it has been now for the last couple weeks here, or several weeks or more, you have overbought tends to become or stay overbought. You get those persistent overbought readings, right? So a downtrend is over like that in reverse, where you're going to spend more time down here tapping on the oversold readings than you do tapping on the overbought readings. And just like oversold in a bull trend is usually a one and done, great buying opportunity, time to back up, load up, cover your shorts, or load up. Same thing if you happen to get oversold if we get an established uptrend. Again, I don't, it's hard to get excited over just a couple new lows. We don't have a very well established downtrend by any means, and as I've talked about, there's also some cross currents. We have the big negative divergences that are starting to play out and starting so far impulsively. That's a big check mark for the bearish case. But on the flip side, as I mentioned on the futures, we have some pretty good bullish or positive divergences, and for me it's usually a wash, rinse, repeat thing. I look for these divergent highs, get short, divergent lows. We had one, I'm only going back a month here on this chart, but we had big divergence on the indexes back when they bottomed in March, or March 23rd, and those are the things you look for. So this, coupled with those oversold conditions, is I believe the catalyst for the bounce so far. And the big question is there going to be more? Like I talked about earlier today, you can draw downtrend lines here on ES. These are the S&P 500 futures. There's your downtrend line. We could easily, I'm not saying we're going to, I really don't know, but we could easily go up there and reverse and still keep this new downtrend. There's your previous low, new lower low, still intact. So I just don't know the very near-term direction of the market, and I gave you levels to watch. I can tell you that those are levels that should and have so far. 28.19, 28.20. Yesterday it was resistance. It's resistance again. You can see we tried to pop there intra-period. That little skinny part, the white part, we call that a candlestick shadow, or when it's up top it's a wick, like a candlestick wick, and down below a tail. But the shadow means you got there intra-period but smack back down. So you can see, if we take it in real tight here, here's what's going on with the market. And so whereas I don't always have strong convictions on where we go, I can usually do a pretty good job of identifying what are the levels likely to come into play as support and resistance. So that's it. If we can pop it with conviction, put it in the rearview mirror, meaning a solid big green candlestick, a 60-minute close above there, then it should open the door to rally to the next level. I could add some lines here if I wanted to. There's a minor resistance there. So that's what we need to watch, and it would also confirm these divergences. Now that's only one index. We watch NQ, even though it's not as diversified, it does contain the most important stocks in the stock market, including the S&P 500. the big FANG stocks, and of course the tech sector, which is very heavy. And so you have the same thing there. You have these positive divergences on the 60-minute time frame. They were building, they were highlighted yesterday, and as I said yesterday, if we took a marginal new low, which we did, that would just simply extend the divergences and keep them intact. So they are intact for now, and it could lead to more upside. And there's your levels to watch. We have a line right there, those recent reaction highs, certainly a level still 91.11-ish, and then that's a pretty big one. I can tell you, because of the fact we failed at the 200-day and all those other things I covered earlier on the daily and weekly and monthly charts, I don't think we're going to rally that far up this time around. I think these divergences will fail to play out for a move to new highs, which they might normally, and they still could. So like I said, here you're hearing me waffle a little bit. It's reflective in my positioning. I'm not right now too heavy in anything in my active trading account. I'm still holding tight to the swing shorts for now in my swing trading and trend trading accounts. But there's other fish to fry out there, so that's why I'm doing the video. Let's dive into there, and let's start with Bitcoin. Had somebody in the trading room. I posted a few ideas in the trading room today. Actually, let me get back to those. I shared one of them in the last video, and that was natural gas. And then I also followed up today with a potential trade on crude oil. Give me 1 second. Okay, here it is. We're going to look at futures. I'll give you a few proxies for you folks that don't trade futures. But if you really want to, especially with the crude tracking, crude went wonky recently. You probably heard it went negative. The crude futures priced negative for the first time in history. A lot of things happened with COVID has just kind of, like I've said earlier, broke the financial markets in a lot of aspects. They're not completely broken. The Fed's thrown a lot of band-aids on there, but there are a lot of areas that did break and some that continue to show a lot of cracks. But since then, crude has kind of stabilized in price. And this is a 15-minute chart here. We're not on a 60-minute. Usually I'm on 60-minute charts on these futures, but this is a 15-minute. And you can see the bigger picture, a lot like the stock market, has been trading mostly in a sideways range. You can define it by that box, and within there you have support levels, as you can see right here, and resistance levels. So we are now at the top of that multi-week trading range right here, and I think that'll probably contain the bounce for today. And even if not, it doesn't matter. Like I said in the post in the trading room, crude oil offers an objective short entry here with a stop somewhat above. That's what it's all about. In other words, if crude's going to go up 20-30% and you short it, you're not going to go down 20-30% in value or your position if you use a appropriate stop. We had a little spike, a stop clearing spike above there, so that's probably a good level to put a stop loss if you are interested in shorting it, or if you want to play it safe. I like to short into resistance and add when on a break of a trend line like this. So maybe a starter position here and a second lot, bring it up to a full short position size on a break of that trend line right there, targeting at least pull back here to the 2676 resistance level, or support level I should say. That's support right there. A lot of reactions there. And maybe let it run for a little bit, because one trading strategy, we're not going to be in a trading range forever. I would kind of, on this trade, my plan is, and I did short it today, is to kind of play it by ear with the market. If the stock market can power on a higher, take out some of those resistance levels I showed you, and those 60-minute divergences on the future play out for more upside, that is going to help crude, because crude is largely, traders will base crude on factors such as the inventory reports, how much crude is out there right now, what's demand like, supply and demand, of course, those things. But then crude will often trade on economic expectations. So if the stock market rallies, it goes to show that the majority of people out there are buying stocks because they think the economy is going to get better for the foreseeable future, and so therefore crude tends to rally for the same reason. More of the lockdowns come offline, stronger economic growth, the more demand for crude oil, etc., etc., etc. Not always, but that's usually the case. So I can just tell you this: I've traded crude long enough. There are periods of disconnects, but for the most part, especially right now with everybody, the big concerns, more so than any point in decades, about where the economy is going from here. That's where I think you want to kind of keep an eye on both. So that's it. So if the market turns down soon, which is certainly a possibility, those divergences may have already played out for all they're going to play out, then this one could be a nice quick trade. That's there's a nice drop. I can't measure from where we're at because I'll move that line. So I'm going to grab it right here from the high, and I'll stop a little bit above the target. That'd be about a 5% or so drop, almost there. Closer to 6.5, no, about 7, yeah, 7% down there. If we get even to this point, the $25 level, you're talking about a 10-11% drop in crude, and let's just focus on that for now. And again, this all may be moot because if it pops there with conviction, that's going to be a breakout. And you can see that level, by the way. Right now, you can see it from these two previous reaction highs. But when I kick out to a let's go out here to a 2-month chart looking at hourly candles, you can see why I have that line there. It's not just those recent reaction highs. This was support way back here on crude oil. It was very, very significant support. Why? Well, you might say, well, there's only a few reactions. What happened? When we broke that level, we began a waterfall sell-off. The biggest drop, that's when crude went on the contracts at the time. The current contracts went negative in that big plunge right there, and so there it is. We've rallied back. Check, check, check. There is downtrend line resistance overhead as well. This comes a little bit longer off the left of the chart here. I have to go back in time. So either way, like I said, it either works out or doesn't. So objective meaning risk a couple percentage points, 2-3% to make 6, 10, 12% or more. And that's it. You get stopped out, move on to the next one, and wait for the next objective entry on crude oil, whether it comes next week or next month or later. And as far as other proxies, you have USO, which is non-leveraged, probably for lack of a better word, your safest bet outside of futures of trading. These ETNs do carry risks, especially with volatile securities. This is USO down into the lows. We put in divergent low, so I look for these things, positive divergence down there. Not sure why I didn't have a divergence line. I haven't updated this chart in a while. There it is. Bullish divergence at the lows led to this rally, and now we have these negative divergences here. The indicators lagging behind. You can see down here it's kind of flattening out because there was such a big move. I can zoom in a little bit there. And so it's the same story. Crude's kind of boxed into this trading range right here. You can see multi-week trading range. And so the strategy is simply playing the pattern until it stops working. Sell your longs and go short at the top. Cover your shorts and go long at the bottom. Wash, rinse, repeat. Wash, rinse, repeat. Wash, rinse, repeat. So again, it either works. And when sooner or later you break out from a price channel. Maybe it's a whipsaw. Maybe it's a real deal, and that's why you don't, hope and pray if you do short it here and it just starts ripping up. That would probably again coincide with a pretty big rally in the stock market, which, like I said, can't be ruled out right now. It's just I'd like to see how today finishes and how we follow through tomorrow. And there's other ones out there too. If you don't like USO, oops, let me just type in the word crude again, just show you. You have SCO, which is a double short crude oil ETN. For as far as shorting, there's its long alternative or counterpart there. DTO, double short crude ETN. There's there's a couple of them out there, but those are the most liquid. And then there's what is it? I think DWTI. Are those still around? Again, there's a bunch of them, but stay away from some of the less actively traded ones, the ones with very thin volume. Not a safe bet to play right now, especially in the crude oil sector. All right, next up, Bitcoin. Bitcoin, had somebody ask in the trading room, what are my thoughts on Bitcoin? I have been following it quite a bit, at least recently. I haven't posted analysis. I'm trying to see which way it goes here. What I've been watching, it's kind of pinched between support and resistance. It's been these are Bitcoin futures, by the way, guys. If I don't mention, it's up here in the upper left-hand corner, the ticker symbol on these charts, and the time frame we're walking off. So this is a 2-year chart with daily candlesticks. So kind of bigger picture view, and you have Bitcoin futures walking up this trend line. And testing, just slightly above. I'm not crazy about this downtrend line. There's not a lot of reactions, but it's worth noting. I think it's a valid enough trend line to trade off of. And so what's also important is this 98, 90-ish price resistance. We got above it here. This was a false breakout right here. That's what you call a bull trap, failed breakout. We popped it but couldn't hold it, and then we took out the trend line, and then that's all she wrote right there. It led to that big drop. But you can see prior to that, that level and why it was an important level and why that proved to be a bull trap, or bull trap's a false breakout to the upside, is you had a lot of reactions there. So I'm validating this support level is what I'm doing, or resistance level, and it was support, support, support. And I pointed out at the time back here we had a descending triangle pattern right here, this trend line and this line. We broke it, boom, pulse of selling, back test, failure. Tried to take it out with a little momentum field overshoot, failed, and nothing is, like I say, fewer things in trading are more bearish than a failed long side breakout, and that's what happened. That's why you had that impulsive rejection, but we're right back to there again. So that's why I'm watching this level and kind of standing aside. I'll let the bulls and the bears duke it out. Just a few days ago, Bitcoin did one of its halving events, where I'm not a crypto junkie, so don't ask me what that. You can look it up. They do something, and it reduces the amount of. I think it reduces the amount of new coins, the availability of new coins yet to be mined in half. I think that's what the halving event is all about. So Bitcoin crypto heads kind of sit back. Some of them think it's a bullish event, some think it's bearish. They don't know what to do, and technically, the charts, this thing could break either way. So I wanted to share that. It's been an uptrend, so it's at resistance. I'm a little averse to even giving you my opinion which way I think it goes, but I'm sort of leaning towards the downside. Just as often a Bitcoin bull, I'm agnostic to any security. I don't care. I'm not married to any one view. We've had a lot of longs and a lot of short trades on this, official, unofficial, in some of the proxies. But again, watch those levels. A solid breakout is bullish, especially over this previous reaction high right here. There's your bull case. There's your trend line. You could use stops somewhat below that. You got to give it some room. Bitcoin's a very whippy, very volatile security, and you want to see a daily close. So there's the bearish case is a breakdown below that trend line, as well as a failure here, or maybe at that previous reaction high, then a breakdown. That would be bearish, probably bring you all the way back down here to 75.32 eventually, at least. And should we keep going up? That's certainly a possibility. And you just want to use these levels as support and set your stops somewhat below them if we fall back below here. Okay, so that's Bitcoin. I know a lot of you don't trade futures again, so I try to always find an ETF. This is the closest one that I know of that's been around for a while, GBTC. We've had many active trades on the site on this, long and short. Most of them been successful. And it has rallied right into resistance. These are old levels I've had on this chart for a long time. That's that same descending triangle pattern I just showed you on Bitcoin futures a while ago. Remember that breakdown, back test that level, false breakout here like I talked about, bull trap, and boom, we're right back there. So this does a good job, and it's what it's doing. It's tracking Bitcoin. It's a closed-end fund, meaning sometimes it sells at a premium or a discount, but it does. It's the closest proxy you can get if you're just if you can only trade individual stocks, ETFs, things like that, that I know of. And so that's it. So at resistance, if it breaks out, and especially if it takes out that previous high, hard to say that's anything but bullish. And likewise, the trend line on Bitcoin futures was a little more clear, but you could put one there, and if it breaks down, you're probably coming back here to that 882-ish level. Okay, and two of my favorite proxies, these are not direct. See, GBTC was a direct play. These are what I call indirect proxies, trading Bitcoin, Overstock, and RIOT, because they have their hand in, that kind of thing. RIOT is RIOT Blockchain Technologies, RIOT Blockchain Inc. RIOT, this was an active trade, an official trade on the site recently. We went long after the breakout of this big bullish falling wedge here, hit our first target, then hit our second target for about, I want to say that was about a 30% gain, I think it was, and then that was it. The stock reversed from there and went on. I had raised stops to protect profits, so we were stopped out for a profit, or some of you probably took full profits at T2 because that was almost about a 30% gain if I recall. But somebody asked me about it today, and what I said is, since then we had that false breakdown in Bitcoin. That was that big drop, and we rallied back to what was at the time the third and final target on that trade. and that level is at 245. Remember, I always set the official targets just a little below resistance on long trades. So that's where we've effectively hit today, a little momentum fueled overshoot, and we've had a reaction. So my answer to that is, look, I wouldn't take it here. The risk reward's not attractive. This is a big resistance level. That's why it was the final target on that last trade, and it still is resistance. It's a notable level. And so where RIOT goes from here depends on where Bitcoin goes, I think. And like I said, I'm leaning towards the downside. So RIOT will probably come back in, getting quite a bit overbought here, quite stretched. Now, please listen to me. I've traded these stocks for years. I've traded Bitcoin for years. If anything out there can become more overbought and make overbought, see extreme overbought readings, it's these type of stocks, these low priced stocks, Bitcoin, things like that. So I just want to say, don't ever short something like this because it's overbought. Because if you short at the first overbought reading, by the time, like you did right here, let's say, by the time all said and done, you had another upside of about another 47%. You would have been smoked. So you don't short overbought or buy oversold just for that. You look for other factors such as overbought into resistance. You look for trend line breaks, things like that. So where do I think it goes? I think it pulls back. I think that's the most likely scenario. And these targets that were resistance on the way up should act as support on the way down. That second target there at 178, the actual support level is at 181, and then you have the big level here where we broke out of about 150 or so, and the trend line comes in there as well. That would be good from where we're at right now. If we get back to 150, that's about a 35% or so drop. So there's some meat on the bone for that one if it comes back in. And the other one is Overstock. Yeah, that's overstock.com. They, kind of like a quasi Amazon website. Amazon's little sister. They try, but the owner of this company has been obsessed with Bitcoin and all things crypto for a while. So the company's got their hand in there, and it tends to trade also, like I said, in line largely with Bitcoin. It's not coincidence. You look at this chart and then RIOT that we just did, RIOT, you can see that they trade almost identical. Big drop after we broke down here, big plunge into the lows, waterfall type sell-off, and a sharp recovery since. Same with Overstock, and the same with GBTC. So they're all moving, roughly in concert there. And so that's why I started out with Bitcoin. All right, so that's it. Now this one has a pretty well-defined uptrend line. It is extremely overbought. We're not at any well-defined resistance level, but like I said, a lot of hot air underneath. And even if it's ultimately headed higher, I do think a break of this trend line will trigger, a nice pullback to maybe this level here. I'll give you that level, about $12, and maybe more, maybe all the way back to 915 or so. That's again if Bitcoin corrects. Bitcoin continues higher from here. We're probably not going all the way back to 915, or maybe not even that 1190-ish level. And last but not least, let's look at a handful of commodities that stand out. Very messy, busy chart, but you can see the symbol right here, JO. This is the ETN for coffee. We've had quite a few, official trades and unofficial trades on this one over the years. The majority of those, vast majority, being successful, getting in early on these bottoms. And the point was, and I covered this a couple weeks ago, a couple times recently actually. We bought it on these pullbacks to here. That's the key level right there, where JO comes back about 30.68. And then this last time around, I said, I don't, we could get there again, but I actually suspect we probably won't, and we may rally from here. So this chart isn't very clear, but what is a little more clear to me is KC, coffee futures. Now remember, Joe, the ETN, is just going to try to track coffee futures. And here's an hourly chart. We have a nice uptrend line we pulled back to, and I highlighted that the last few times it's pulled back. It goes to the left of this chart, but that's where so far when coffee pulls back. So it's I'm not going to say it's in an uptrend, because again, you look at that chart of JO and it's kind of in a big choppy sideways, what may be a basing pattern, but there are big trends within this pattern to trade. So maybe one day we break out to the upside, but even until then, I'm just looking at it as swing trading ops. And again, going back to KC, It's a simple watch, rinse, repeat thing with risk reward, factored in. You go long, pull back to this trend line with a stop somewhat below because that would be bearish, and then you try to capture the next trend. This last time around, that was a run up here. This time we had a little downtrend line we broke above right here recently and reversed off support, held it so far, and these are all potential targets. In fact, I would focus right now minimum this one up here about 115, and maybe just hold it as a runner trade. It can maybe head on up here to that one. I probably should lower that line. That was from before. I'm going to add a second line there. I think that line's still valid, but let me give you a potential target zone if we get some traction to the upside. That'd be about 122 to 123, and maybe more. Again, that's if it doesn't peter out here and just drop below there and break support and then drop. But it is objective. We had a divergent low last time. We don't have the divergence right now, so I'm not gung-ho about it, but I figured it's worth sharing for those of you looking for other ideas and to diversify. JJG. JJG is another one I've traded on off over the years. I like to actually trade the individual components. This is a one-shot, one size fits all, or one shot to cover both, to go long corn, soybeans, and wheat. Or you can short it if you want. But I like to just let these little bullish falling wedges with divergent lows set up right here. Go long, wash, rinse, repeat, capture the bulk of a long trend. Get the bullish falling wedge. You see the divergence setting up. Wait for the breakout above the wedge. That's your buy signal. And then trade it up to these targets. So it's wash, rinse, repeat. What do we have? Well, once again, we have you got it, bullish falling wedge pattern with positive divergence. No buy signal yet, but sometimes you can go long in anticipation when these wedges are ripe, fully mature. They look like you have enough reactions there, and you can go long, and then maybe add when you get a breakout of the wedge. First target 43.50, second target zone up there about $46. Now, again, if you really want to do your homework on it, and it's not very hard, corn, soybeans, and wheat. Best if you can use the futures charts. They're free if you don't have a futures account. Go to investing.com. TD Ameritrade, they will give you quotes on futures if you have an account with them. But like I always say, any index or ETF is simply a sum of its parts. And in this case, you have corn, soybeans, and wheat. So we look at corn, C-O-R-N. Corn has a nice downtrend line. It recently popped. Seems to not be able to get any traction lately. We had some divergence, but we had a recent trade on that was taken out and stopped out, but it still looks constructive. Like I said, there's not a hard buy signal on it yet. We had a breakout, but really no impulsive follow through yet. But it is a constructive chart, so I think corn has the potential to run up here and hit that trend line, which was our first target on the last trade, and maybe ultimately up here to about that resistance level at 1425. Would be a pretty nice run if it does so. For that commodity, that'd be about 21% or so. So corn, that's how that looks. Soybeans, similar pattern here. Divergence is building, but nice trend line to watch for a breakout, and looks good all the way up here to at least this 1474 level, quite possibly this longer term downtrend line. So again, these have constructive patterns. They just need to get that oomph. They can't seem to get going, but when they do, they all tend to run together. So there's soybeans. I already covered corn, and here's wheat, the other component. I guess, do we have an active trade on this? So many. I look at these. Sometimes they're, official, unofficial. I guess so. And it looks good for the reasons I mentioned before at support. We don't have divergence, but let me show you a couple other things here. Starting with the chart of wheat futures, CW. So if you want to trade futures, here's your contract, CW. Divergences have been building just as they were building here, building, and they finally played out. Just like the stock market. Remember those negative divergences that have been building. I'm sure some people were starting to give up on that. And they're not guaranteed to play out, but much more often than not is what I like to say. Divergences will end up playing out for a trend reversal, and in some cases it can be explosive, and that's the case with a lot of these commodities. If you sat back and waited till you were hearing about a bullish move in wheat on CNBC or your favorite service, you missed it. So there was a breakout, big run up in wheat, And at the end, it came full circle. You can see down here, negative divergence. That said, hey, the rally's probably coming to an end. Divergence lines would look like this. There's your divergence lines. And that's it. So here we are, full circle, positive divergence. There's a little trend line which could trigger the next, spark the next rally. And these are all potential targets up here. And cane is one of 2 sugar ETFs, or ETNs to be correct. You can trade. The other's SGG. We'll look at that in a second. Divergent low. It had started to get going, pulled back. Like I said, these commodities, a lot of them look to be bottoming, and I do maintain there's I think the risk reward profile compared to the stock market, and I'm talking if you were to go sail around the world for a year and you could only put your money into one thing, either agriculture commodities or the stock market, I feel strong that the risk reward is much better. In other words, minimal downside in commodities, no chance of Chapter 11 bankruptcy protection. And for sugar or wheat, people are going to need it. People are going to need to eat no matter what happens, no matter what happens with coronavirus, no matter what happens with the economy. So, there's a certain floor and a tangible value that you don't have with the equities, with stocks. So again, now the downside is they don't pay dividends. So even if they don't go down much, it could be a dead money trade. So you maybe ease into these now. I think they're make sense as far as asset allocation goes. And once we start to see these things perk up and start to break out above trend lines, resistance levels, give us some buy signals, some impulsive buying. We'll jump in, and you'll probably see some of these come back on as more of these, I should say, as official trade ideas. So that's Kane. SGG is the other one. Then we ran our stop one day, came back up, and again, it's constructive chart, bullish falling wedge breakout in SGG, and still think it'll go up and hit. Well, we already hit. I should make that clear. We hit our first target early on in that trade, and the second target's way up here, and there's a potential target there about 40.47. These are sugar futures, SB. They need to, SB really needs to take out this 1081 level right here to get going. But, there was your wedge pattern. Same thing in sugar that I was just showing you on the ETNs. You had this bullish falling wedge here right there. And there's your divergence, all that good stuff. Breakout. And we've kind of been consolidating and need to now take out that previous reaction high. Whereas JGG was a one-size-fits-all for 3 of those grain commodities, corn, soybeans, and wheat. You really want a one-size-fits-all in the ag arena, then you go with DBA. It has live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, lean hogs, feeder cattle, and cotton, all in there. So it's kind of a one-size-fits-all. Anybody wants commodity exposure to the commodity arena? That's the nice thing, is there are commodity ETFs and mutual funds out there, but many of those have natural gas and crude oil, and some of those, such as a big one is, I've got it here in my watch list somewhere, GCC. Here's a Wisdom Tree Continuous Commodity Index Fund. A lot of these commodity indexes put a very heavy weighting on crude oil, and so again, that's a good thing when crude's going up, but when crude's going down or going sideways, that's what you don't want to be in. So again, if you want to have all type of commodities, you go with this, and if you want to focus only on the agricultural commodities, DBA is your go-to ETF right there. And it is an ETF, not an ETN, unlike a lot of these commodity ones. So that's an added plus, I think. That's it. Next target up here, 1467. Again, more of a longer-term hold. I think that's about it. I covered UNG and natural gas in the previous video, so let me just look this over and make sure that's it, and I'll get this video out to you guys. Let me see if there's anything else to cover. No, not as far as trade ideas, but I will conclude the video here. Since I started this video, we had a nice impulsive breakout above that 2819, 2820-ish level on ES. Remember, that's that level we've been pushing against for a while, following the divergent low. So that is bullish as long as that holds. However, at this point, you see a little more upside in NQ, because at the very same time, NQ is testing comparable resistance. By comparable, I mean it's the same reaction highs that ES just punched through. So I've seen this often. And one index breaks out, all ES traders are jumping in ES right now and it is a breakout. However, if the NQ traders more short step in and the sellers the buyers can't pop this same comparable level, those recent highs, and NQ fails, well, it'll bring ES right down with it. So we're at. I'll wrap the video up here. By the time I get this out to you, if there's a solid break above there, you can see, those are potential targets. If it breaks out and then fails and ES fails, that's a false breakout. You might want to stop out if you go long. If you're active trading, or maybe if you're looking to add to shorts, you could either wait for that failed breakout or maybe add to short positions on a bounce back to either of those resistance levels. Remember, this divergence has the potential to carry us way, even up to new highs and beyond. So I'm not going to, again, I don't want to underestimate or minimize those divergences, despite, again, they come on the heels of big negative divergences, but we've had, as I said, one of the biggest drops since the market bottomed back in March. So is that enough to satisfy the divergences? Possibly, especially if the market's going higher. I don't think so. I'm still leaning towards upside being minimal and going on down. In other words, that these divergences only play out for a relatively small bounce. But we'll see. If my convictions were a lot higher, I would tell you. But the levels to watch, and then you can act accordingly. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.